All right. So,
Right.
Jim, great to talk to you. I've been a follower of you for many years, and we've actually met once. I You talked in Las Vegas at a conference about 10, 12 years ago, and I actually flew down to Vegas, arrived at 10 in the morning, watched you speak at 12, and flew back to Vancouver at 1 in the afternoon. So it
Oh
was
my gosh. Wow. Wow. Wow.
well,
Well,
I wanted to see what you had to say, and I certainly wasn't disappointed. And we actually exchanged books. I think you had just written Street Smarts at the time, and I had written a book called Stock Market Superstars, which was actually based upon Jack Schwager's book, Market Wizards, which you were in.
yeah.
And it was with Canadian money managers. And I phoned Jack actually before I did that book and said, "Do you have a copyright on it?" He said, "Go ahead. If you want to do it in Canada, go ahead." So it was great. And you've been an inspiration to me regarding my family. Actually, I, like you, started late in life. Got married when I was 46. Read about your family in your books and how you started late in life and how it, maybe you didn't realize the importance of family early in life, and it was the same with me. And I'm so happy now to have a 3.5-year-old and a 1.5-year-old at 52 years old. And
Wow.
you're a little ahead of me, but I'm looking forward to following in your footsteps, spending lots of time with the kids.
Well, it's a lot of fun. Has been for me. It certainly has been a lot of fun for me.
Fantastic. And to all of my great clients, I give one of your books to them, and it's a gift for my children.
Ah,
All the ones that have had grandkids or kids recently, and I say you got to teach your kids about this, and this is a fantastic book. So thanks for giving that. I have a whole stash at the office that I give away.
hooray. Thanks, Bob. Thank you. I wish I were there to sign them.
That's fantastic. We'll meet again one day. So what I do is I manage money for a lot of kind of ultra high net worth mining executives, so C-level mining executives. And obviously we know the commodity sector is probably the most cyclical sector in the entire world. The ups are extremely high and the downs are extremely low. So what I try to do is help them keep their wealth once they have it. And that a lot of times is avoiding the round trip. So that's kind of what I want to talk about in the commodity cycle. And I think, with the fund you managed in the 70s, you did an extremely good job comparing 4,200% versus the S&P 500, basically flat. And that was a great commodity cycle in the 70s. Do we have any parallels to what you saw in the 70s?
Well, we have inflation back now. It's different to some extent. There's mainly based on money printing now. There was a lot of money printing in the 70s. But there were also supply-demand, huge supply-demand imbalances for gold, for silver, for oil, for many reasons. They set the price of gold in 1933 at $35 an ounce. So there wasn't much exploration or production for decades. So by the time the 80s, the 70s came and the 80s, the supply-demand was terribly out of balance. That applied to other things too. We don't have the same supply-demand imbalances now, certainly not in gold and silver, but there are plenty of supply-demand imbalances. Lots of money printing now, more than there was in the 70s. So it's not the same, but inflation is here, and I'm afraid it's going to be here for a while.
Right. The central banks, they use the word transitory, and I think they did in the early 70s too. And I think a lot of people are seeing that maybe it isn't transitory and it's going to continue. And but obviously that hurts growth after a period of time, as it did in the 70s, and you get a lot of inflation with very little growth, called stagflation.
But we have a lot more money printing this time than we did in this. We had money printing in the 70s, but nothing quite like what we have now. This has never been seen in world history, what we have now. And now it's all over the world. It's not just in one or two countries as it was before. So this probably is going to turn out to be a horrible experience for all of us in the end.
Right. So hence the hard assets obviously maintain their value or have to go up with inflation. Now, interestingly enough, is it the commodities going up in value that causes the inflation, or does inflation go up and that causes commodities to come up with it? I guess is the tail wagging the dog.
I don't know what difference it makes. Prices going up or prices going up. If you go to the grocery store and you need to buy a loaf of bread and the price is up, you don't care if it's because the wheat went up or because the money's gone down.
Right.
Still, the prices are going up, and I'm afraid that's what's going to happen again. And unfortunately, the central bankers don't have a clue. You know, most of them are academics and bureaucrats who don't know what they're doing. And that's not good for you and me and everybody watching this program.
You know, they need somebody who's actually had capital on the line or clients' capital on the line to actually run the central bank and understand risk and reward and how things should work. But it doesn't work that way, I know.
Well, in the US, we've only had 2 or 3 good central bankers in history. There haven't been many in the world. The Indians had one a few years ago, but for the most part, we haven't had many good central bankers in world history.
Right. What I've always loved about kind of your philosophy is how practical and common sense it is. And you know, as they say, common sense is not that common in the world. And I think you've said before that if you want to do well in finance or in the market, skip the degree in finance and get a degree in history, psychology, and philosophy. Maybe you could expand on that a little bit.
Well, at one point I was a professor in a business school, an Ivy League business school, and I was amazed at some of the things that the students were being taught. It didn't have much to do with the real world as far as I could see. You know, you needed to figure out what made things go up, whether it's stocks or cotton or whatever it is. You needed to figure out and what made them go down. And then that's how you would make success in the investment world. I didn't see much of that going forward in those days. And so when I taught, I tried to teach them, okay, guys, let's analyze these investments and see what makes them go up or go down. It's not easy, but let's try to figure out how to do it. And I mean, there are people who make money and who are successful at investing. But as you know, most are not successful at investing, and certainly most academics are not successful at investing. This is not an easy way to get rich, Bob, as you well know.
No, a story I love to tell of yours is what you would say to the students, the business school students. You'd say, take your $100,000 and instead of spend it here, go start a business and go bankrupt. You'll learn a lot more about business.
Absolutely. You go down and buy soybeans one day or short soybeans. Better still, sell soybeans short one day. You'll learn a whole lot very, very fast.
Right.
Much faster than business school.
And I think you lost all your money in the first go around at well, actually you did very well, and obviously you got overconfident and then lost it all after that, which is probably the best thing that could have happened, as you said, right?
Yeah, it made me think I was smart. Then I found out I wasn't so smart, which is a very, very good lesson to learn.
Exactly. So being that commodities are cyclical, I use something called the mining clock, which actually is a great representation of where we are in the mining cycle. Where do you think we are as far as how far along in the cycle? Because it'll end one day. It usually ends in euphoria, and then it's done.
Well, as you know, mining, there are lots of things that we can mine. For instance, copper right now is making all-time highs, but that's apparently because you know now we're going to have electric vehicles, and electric vehicles use much more copper than a gasoline vehicle or petrol vehicle. So there are different things happening. Silver's down 60% from its all-time high. Copper's at an all-time high. So there are different cycles going on. There always have been and always will be. As far as I can see, given that metals are hard assets, very hard assets. And usually when you have a lot of inflation, hard assets are a way to protect yourself. So as far as I'm concerned, the more hard assets you own, the better off you will be. At the moment, as you know, I mean, silver and gold are down a lot. Gold especially down a lot from its all-time high. You have a little bit, yes. Well, silver's down much more than gold compared to its all-time high. I own both. I will be buying more of both somewhere along the line. But if I were buying more today, which I'm not, but if I were, I would be buying much more silver because it's down 60% from its all-time high. And that's a lot.
Right.
So I try to find the things that are cheaper when I'm investing and start there. Doesn't mean I invest, but it means I start there.
Now you wrote hot commodities very close to the bottom for commodities, unlike me who wrote my book that came out in October of 2008, right as the market was absolutely cratering in on itself. But anyway, we'll forget about that. But as far as obviously the hot commodities, I mean, it came out in 2004. The last commodity big bull market was demand driven, right? You've talked about China. You wrote the book A Bull in China, and there was a tremendous amount of demand. And I think commodity bull markets can actually be demand driven or supply driven, in that there's been no capex and there's a lack of supply. What do you see going forward here that's driving the commodity market? Is it kind of demand or lack of capex over the last few years?
Well, that's a good question. The 70s was really probably more a lack of supply, whereas now it's really more demand because of all this money printing. And of course, you have a lot of strong economies in the world. China's much different now than it was in the 70s. You know, Mao Zedong was still alive in the 1970s. He's not around now. Fortunately for China and for us. But so this time around, I think it's more demand driven because of all the money printing. Money printing is not good, but it does make a lot of prices go higher. And if you own the things that go higher in price, you do well when there's a lot of money printing. You know, a good way to run an economy, to run a society, but when it happens, one can prosper.
That brings up the next point. I mean, are the central banks of the world not absolutely cornered? I mean, there's so much that they can never allow even a shallow recession ever to happen again. A shallow recession cleans out the debris and allows things to start. They can't even allow that to happen.
Well, they all want to keep their jobs. They don't care about you and me. They care about their jobs. And so, yes, whenever things start looking bad, they print, or do whatever they have to do. You know, the head of the Bank of Japan, a good bureaucrat, goes to work every morning and in his word, prints unlimited, that's his word, unlimited amounts of money. And he buys stocks, bonds, ETFs. Well, I own Japanese ETFs because he's buying Japanese ETFs. He has more money than I do, Bob. So if he's going to buy Japanese ETFs, I am too. Right. But these guys are not, what they do is good for me, but it's not good for the world. It's not good for Japan, not good for the world.
And you just wonder how long it can actually go on. I guess it can go on until it can't go on, or until people lose faith in what they're doing. But
well, these things usually go on until bear markets start for a variety of reasons. But if nothing else, eventually things just get so expensive that there's nobody left to buy, not even the central banks. And so then we start having bear markets. Right. We have always had bear markets and we always will. Now, in Washington, we have a Secretary of the Treasury who said, no, don't worry, we're not going to have any more bear markets. We have things under control. Well, Bob, I mean, she has a couple of fancy Ivy League degrees. If you believe her, don't listen to me. But I've read enough history that I know we've always had bear markets, and I suspect we always will.
Right. History doesn't repeat itself, but it rhymes, as they say, right?
Well said.
Now, one of you had a few keys to doing well in the markets over time, and one of them was not to trade too much. And I always say the portfolio is like a bar of soap. The more you touch it, the smaller it gets. And maybe you could talk about that. And you've talked about, I think, people feel like they have to do something in the market all the time because the market's trading every day. They have to do something. And I think you said you don't have to.
Well, many successful investors do nothing most of the time. They wait until they find something that they know is going to be good. You know, if I see money over there in the corner and all I have to do is go over and pick it up, I hope I'm smart enough to go over there and pick it up and do something. But if there's not, then I like to wait and do nothing and do nothing and do nothing until I see something. And then even after I invest, it's usually best to do nothing and wait for things to develop and grow and mature and become successful. Now, that's my way. But Bob, I used to work for a guy who was a phenomenal trader. He didn't know what he was trading. I mean, he knew IBM had something to do with computers, but he didn't know much about IBM. He didn't care. But he could trade like nobody's business. If he owned something 3 days, it was long term. Sure. But he was really, really good at short-term trading. I was horrible at it, still am. But so everybody has their own way.
Now, you started in the markets in 1964. I started in 1996. But this feels a lot right now, kind of where we are in the commodity cycle, where the NASDAQ is, and where the euphoria in a lot of these stocks that have no sales, or sorry, no earnings, but traded 100 times sales. It feels a lot like 1999 or 2000 to me. And it's shocking, actually. It makes me feel old. I remember 1999, 2000 in the tech bubble. There's very few people in the markets that even remember that.
I remember before that, Bob. So, no, you're exactly right. And that's maybe a good analogy. Yes, yeah, that may be a very good analogy. We're having a bit of madness developing. We're having bubbles develop. Not everywhere yet, but we are having bubbles develop, and we're having inflation developing. So you may very well, and commodities bull markets developing, you may well be right. A difference, of course, is that bonds are now a big bubble. Bonds are one of the most obvious bubbles in the world right now. They were not in a big bubble in 1999.
It seems that almost everything, I mean, real estate is crazy all over the world. It seems that almost everything in the world is overvalued except for the commodity complex, to me.
Well, bonds are a bubble. Never been this expensive in history. Stocks are beginning to form bubbles. I mean, Apple goes up every day. 10 cent goes up every day. You know, property in many places. I mean, you go to Korea or New Zealand or places, property is forming bubbles. But I mean, silver's down 60%. Sugar's down 60%. These are not bubble numbers when you talk about some of the prices of commodities compared to their all-time highs.
Right. You know, and I think it's really overlooked. And you know, Robert Friedland, who's a mining magnate in the world, said recently. He said, sometimes I wonder where the guys on Wall Street think they got their ham sandwiches from. He said, I think because I think they think they got it from the fridge, right? So people overlook that our entire world is made up of commodities. Everything you look at is taken from the ground or.
Well, I can remember many times in my career that people had no, I mean, in the Wall Street Journal, there was a commodity page. Many people didn't even know it was there. You know, they never bothered they did not know there was a commodity page. They did not know about commodities at all, except when you turn on electricity, it comes from somewhere and it comes to you on a copper wire somehow. So as far as I'm concerned, people are better off if they know about commodities and everything else.
Now we're having a bit of a energy crisis these days. I mean, natural gas in Europe, oil is over $80 a barrel. You know, that's pushing through to people thinking about ESG, and uranium starting to do well, which is a very small market, and that's why it's popping up. But why is this energy crisis happening right now? Is it?
Well, it's partly because everybody said we got to close down all the coal mines, and we got to close down energy plants, and oil is bad. But okay, that's fine. If the world wants to close down coal mines, they've got to understand that might lead to energy crises somewhere along the line. If they say uranium is bad, okay, if that's what you want, but you got to understand that there are circumstances and consequences of closing down many sources of energy. And I think that certainly in Europe, they said, we're going to close all the coal plants, we're going to close all the uranium, it's horrible, horrible. It's okay, do it if that's what you want. But there will be consequences, and now we're starting to have some of those consequences.
Right. It's funny how people think we can make the switch to non-carbon based energy in a year or two or three. I mean, this is a multi-decade process if they're going to do it.
It's certainly going to take a long, long time. Yeah, most alternative energy, wind power, solar power, most of it is still not competitive economically. I mean, at $200 oil, of course it's competitive, but most of this stuff has to survive with subsidies or whatever, and it cannot replace carbon-based or uranium-based energy yet, whether we like it or not. And it's fine if that's what we want to do, close it down, but there will be consequences.
Right. I said that to a lady talking to me the other day who thought the whole world should run on wind and solar. And I said, no, that's fantastic. I said, as long as you're willing to have your lights off for 12 hours a day. I said, because the wind doesn't always blow and the sun doesn't always shine. So if you want to store that energy, we need big capacitors now to store that. Now you got to have a lot of copper and things that we take out of the ground.
Right. If you go in and you hit the light switch and nothing happens, then you say, wait a minute, I prefer to have electricity. I prefer to have lights than some of these other things.
I read yesterday that 1 billion people in India and China don't have an automobile, and also 1 billion people don't have air conditioning in their homes. I mean, the demand has still got to be massive from these countries. And I know you've been very positive on China, and there's been a lot of debt issues in China and things like that. But generally speaking, there's still going to be a great demand there, I presume, from these places.
Well, there are a lot of people in the world who don't have refrigerators. There are a lot of people in the world who don't have look around your house. I promise you, there are a lot of people who don't have all the things you have in your house. And you know what, Bob? They want to have refrigerators. They want to have the things that you have, and they're working towards getting them.
Right, and there'll be political unrest, I'm sure, if the people don't start to get that. Obviously, that starts to happen. And I learned a lot from your first book that you did, Investment Biker, when you talked about that going through the world. And one thing that struck me is you were going through Kazakhstan, Tajikistan, Uzbekistan, across the southern Soviet republics at the time, and you said, I see in the next generation it's not going to be communism versus capitalism anymore. It's going to be other issues. And
I assure you, Bob, in Vancouver, if the lights go out and there's no petrol in the stations, a lot of people are going to be very, very unhappy about a lot of things, not just in Vancouver, Denver, New York, London, you name it. So we all like the way we live. And if you're in India and you never had electricity, you're not quite so unhappy if people in New York don't have electricity. But in New York, they're very unhappy. Right. If they don't have electricity and they're used to having it.
The amount of giveaways in the world now that the governments are doing and politicians are giving people to get elected seems to be just increasing dramatically. And people talk about universal basic income and this giveaway and that giveaway. And, I think COVID has caused a lot of this, but it's not going to go away. People are just going to expect to be bailed out all the time by the government. And obviously, what are the consequences there?
Well, I'd sure like a free lunch. We'd all like a free lunch. Problem is, I have learned there's no such thing as a free lunch. Many of us have learned there's no such thing as a free lunch. We learned the hard way.
Right. And
unfortunately, the world's going to, history shows that most revolutions start by people who've had aroused expectations and then they get taken away. Suppressed people usually don't revolt. It's the people who had electricity and they lost it that get unhappy and angry. People who never had electricity don't get as angry as the people who had it and then lose it.
You give it to them and take it away. That's right. That's right. Now you mentioned that you're not necessarily buying gold and silver right now. Do you just expect the U.S. dollar to continue to do well as we get some?
Well, I'm perplexed about the dollar at the moment. I own a lot of dollars. I own them because normally when things go wrong, people look for a safe haven, and many people think the U.S. dollar is a safe haven. And that's why I have owned and do own it. I own other things as well, obviously. And I'm trying to figure out now, they are printing staggering amounts of U.S. dollars. The U.S. is the largest debtor nation in world history. So I'm beginning to wonder, the problem, Bob, is I don't see an alternative. I mean, we're not all going to rush in and buy the Canadian dollar or other things, The renminbi is, which is a logical choice, but the renminbi is not convertible at the moment. So that's not a logical, I mean, I don't know quite what else to do. I mean, obviously hard assets, I do own hard assets. But as far as currencies are concerned, I am a little perplexed about what to do about my dollars right now. I own them. I own them because I know that if the people are desperate for a safe haven, many people still think the US dollar is a safe haven. It's not, but people think it is. So I'm trying to figure out, maybe I should ask you.
Well, it's a sad situation when the US dollar, all the money they printed and the debt to GDP and all the numbers we look at is the best of the bunch. The other ones are worse. Europe's worse, and it's
Well, when you look at the euro, the euro is probably going to go up for a while, but 10 years from now, the euro may not even exist. You know, you look at the Japanese yen. I mean, they're printing staggering amounts of the Japanese yen. Now, you look around the world to find out where to put it. As I said, the renminbi is not convertible, so that's not a very viable option right now. Pound sterling, they got worse debts in most countries in the world. So it's very hard to find a viable currency at the moment.
You've been obviously very, very good at connecting the data points and the dots and seeing things that other people can't see. And obviously we know that's the definition of success, is seeing the same information everybody else sees and deriving a different conclusion. One thing that I am astutely interested in, and something that you've said over the last few years, is North and South Korea. And every time I see that the North and South Koreans are talking again and getting close, I think, oh, Jim mentioned that they could merge. It surprised everybody.
Well, in fact, I was just on another TV show in Korea yesterday. Unification, they all talk about unification. My view is that they just opened the 38th parallel so that there's a interchange of people, money, trade, etc. That would solve the problem. Unification will come on its own someday. At the moment, there are a lot of people who are against unification in Korea. So my view is just open the border and then something will happen. The people in the North certainly know how they live in the South. But the North has a lot of cheap, disciplined, educated labor. They have a lot of natural resources. So, and they're right on the Chinese border, 80 million people on the Korean Peninsula. If you open that border, something will happen and it will be good and it won't be war. And they both, I mean, North Korea spends huge amounts of money on defense. South Korea spends huge amounts of money on defense. Think about all the money they would save if they didn't worry about killing each other and building tanks. And then they could really have a strong and viable economy. That's my view of Korea. And in my view, it's coming. It's coming in the foreseeable future. And by the foreseeable future, I don't mean decades. I mean years or months.
Right, I understand. Well, Jim, I could talk to you all day. I sure enjoy exchanging ideas, but it's been probably about half an hour, so we should probably end it there. But I would certainly love to chat with you again, and I'm gonna send this interview out to my senior mining executives so they can, feel comfortable that they're in the right industry. I think right now.
Well, I mean, senior mining executive is probably a good place to be right now. It's better to be a mining executive than a Wall Street executive in 2021. So I think they're about to go into a period where they're going to be very happy they went to geology school instead of finance, instead of studying finance. So they're better off for a while.
Well, I think you mentioned the number of people getting CFAs and MBAs is just exponentially increasing. The number of people getting agricultural degrees or mineral engineering is at all-time lows. So
more people in the US study public relations than study agriculture. So, I have learned in my life, if you don't have much competition, chances are you're more likely to be successful. If you go to a place where everybody is your competitor, that's usually not a good place to be. At least for me, I'm not smart as most people, so I'd rather have not so much competition.
Well, it's common sense, but I guess that being born in Demopolis, that's what you got. It's common sense, right?
I hope.
You were born in Baltimore. I was.
Well, I was actually born in Baltimore, but that's because it was during the Second World War. My father happened to be stationed there. He was only, he and my mother being the good military wife was following him around. We were only there a few weeks, a few days.
Okay.
And that's why I was born in Baltimore. I couldn't even tell you the hospital I was born in, but I do know my birth certificate says I was born in Baltimore, and I know why. Second World War.
Well, fantastic talking to you, Jim, and we look forward to doing it again, okay?
My pleasure, Bob. Let's do it again. It was fun. Yes.
Thanks a lot.
Very good. Thank
Okay.
you. Thank you.
Talk to you
Be
later.
careful. Be
Okay.
careful. Thank you. Bye-bye. Bye-bye.